hope you guys all had a great weekend, and I hope you all had an awesome week last week. That was pretty unreal. I was away for conference for a lot of the week, but just the way that the chart set up, it still ended up being one of I'd say it was probably like my top five, in my top five in terms of overall profit and earnings, just based off of the charts that were there. A lot of the higher time frames really took control. It was pretty awesome. So I hope that you guys all crushed it last week too. I think out of all the charts we posted, I think only like one or two didn't fill or went in or kind of negated our levels, but for the most part, everything was pretty on point. All right, so we're sitting at 8:03. I said we get started at 8:03. Share, as always. Virtually, this is recording. Okay. As always, if you have questions as we're going through this, then by all means, drop them in chat. The plan is I want to look at the ES, I want to look at crude, and I want to look at the pound dollar. I was planning on looking at the Aussie yen, but the Aussie is, a lot of the Aussie pairs are starting to come into this section right here, which is this little flash dump here is making this a little, this flash dump paired with this drop right here that's just been pretty floor fell out type drop is making finding long something that I don't necessarily want to do. So I'm going to stay, you'll probably notice in the chat this week, I'll stay away from Aussie pairs probably for the most part. But the pound looks all right. So those are the three planned areas. We're going to look. Without further ado, let's get started. I'm taking a look at the weekly here on the ES. My mouse has a mind of its own this morning, so bear with me. Looking at, there we go, connected. So looking at this little section right here, that was the second wick that I was looking at just for clarity's sake. I wasn't trying to force that to happen if that wick wasn't there. And this low wick, the body didn't hold below or above this, then I probably wouldn't have used this. Probably would have used this, and we would have sat fairly low here. Let's move this up though. This is not in the right spot. So looking at these three sections right here, those of you that have been through Forex structure course, this is not a test, but this is an important question. Let's go out of these three, right? Out of these three, which would be the appropriate fib anchor? Out of these, these being either use this as the anchor, break a significant level, use this as the anchor, break a significant level, or use this as the anchor, jump off of a significant level. Let's see, who's on, who's taking it? So just pulse of the room. What do you think would be our anchor here? High to high. Which high to high? We've got two. There's this one or there's this one. The first one. So right here. Okay, so that was out of the three. That was likely the second, or that was the second option. This would be wrong. This is slightly wrong. and this is the one that we want. So when you keep in mind the high to high, you don't want to overuse it. What you want is you want to capitalize on transactions and heavy movement. And if you look at kind of what happened over here, right? If you look at this level right here, is this truly a significant level? If you look at where the price movement really happened, it started to drift downward, right? And once we closed out this little wedge here, this was kind of the jumping off point. This held. So this was essentially right here. This was essentially the jumping off point for what was the break of the significant level, which was this. So while not incorrect that you want to look for a break of a significant level, this did not give you the strength at which you want to look for a break. And I did this purposefully because I've noticed that a lot of people are misusing fibs, and they're not placing high to high properly and overusing high to high, when in all reality, what you want is you want to keep it simplistic. If you look at this chart right here, and that jumped way past where I wanted it to, you could either make this change control or supply. Either way, it works really well. You get this level of significance right here, which is the level that held precisely with strong movement out of it once, twice. There's the supply 3 times, and then the 4th time is actually the 3rd and the 4th time is in tandem with this trend line here. So let's take a look at how these map out. Right, that holds, and that holds. This right here front runs. I don't know if you can see it, but there's probably a couple point difference between that and the front runs. And while that's not insignificant, or that's fairly insignificant in the grand scheme of things, it's entirely by happenstance. You want to make sure that you're capitalizing on transactional movement and heavy volume, right? You want to make sure that as the whole point of high to high is when a significant level is broken, it breaks with authority and it reacts out of that level accordingly. This does not happen, and it kind of, it works not against my argument, but it doesn't help illustrate it quite as well as I would have liked, being that it front runs by a bit, but it's still fairly close. I kind of wish it was a little bit more off, but this, in this scenario, is the appropriate anchor, although it does look messier than this, right? It's more just the overall sentiment of the market. You're looking for that break of the significant level, and right here, it's not breaking a significant level. Like I said, if you were to want to find the last sell-off before the break of that level, you would have to go here, because this is the last, this is the significant level, this is the last sell-off. Significant level in this case is that trend line low, or trend line high, excuse me. So I'll widen that, and I'll leave that just for educational purposes. Now what that gives us moving forward is that gives us validated fibs. So if we do get that big sell-off that everybody's wanting and everybody's clamoring for, except for my mouse because it's not snapping to the right spot, we get this zone right here that really starts to shape fairly nicely. And we can leverage this in terms of some of the lower time frame stuff. So I'll drop into the daily and start to plot out some important levels. That's a bit too drastic, but does cross decently. I don't think we'll ever have an opportunity of getting that far down that quickly. But let's take a look at, there's the other level I wanted. So this week's going to be interesting because we're currently in a position where we're starting to test small area of change control on the daily. So this is going to be an interesting start to the week. Do we rebound and start to push towards some of the targets to the upside? Because there's a lot kind of baked between, what's that, 31.34 down to 30.27. So there's 100 points right here of discrepancy. But there's that 30.23, the low target, maps out nicely with that channel high. And if we can keep this as the low, and we push off, then we'll really start to formulate a nice potential to do something like this before the sell-off. I don't know if you can see that too well. It's brown. I don't know why it changes the color every time on me. I wish it would just stay red, but there's that opportunity if this does hold. Now, given that it hasn't, I'm not going to keep it on there. There's still some stuff to like to the downside right around that 78.6. It's more of a pivot point in the middle of all that movement, so I'm going to change it so that it's not indicative of true supply or support and resistance. And then, this didn't go to the right spot. Why did that snap super low? And then if we can get some form of a retracement coming out of these levels here, would have to, for me, honestly, if we were going to continue lower, would have to drift, would have to get a little more separation. I don't know. There's not much that I like in terms of confluential entries for a bearish retracement. I think would have to get a little more separation. Like if we were to come down here, this would be a little more ideal if we could fill down to this 61.8, because then we'd have some separation. Our 50 would be right at this level, and then our targets would be right around the 78.6, that pivot point, and then the low target right around here. So if we were going to look for a retracement, I'd want it to drift a little lower at this point, because right now there's not a ton in terms of the high structure, since we are in all-time highs, and this is the issue you get into. There's not enough structure to really signify something super strong. But if we look at the 4-hour, this channel is nice. We do still have this gap fill level, and you can see that this actually lines up pretty perfectly. That hasn't filled yet. So we've got the gap fill level, and let's add some of the 4-hour levels on here. That held well. We still haven't filled those low targets. So right now, on the 4-hour at the very least, this area, this little zone, looks fairly decent depending on where we can test the trend line. There's a good bit to like there. If you were going to go long, ideally for me, I'd want to wait. I'd want to wait to do And that didn't illustrate the way I wanted it to. I'd want like a little bit of a pop today and then maybe fill down around here. That's my long. I don't know that I'd even that I consider going long here. Maybe here, if it's a quick spike down, like the body would, fill above this. I don't know. You can see the bear strength it's pushing downward with. So I personally don't think I want to look long there. But that's just me. I'll leave that. Get rid of this so it's not quite as messy. The deeper retracements, but that's just my take on. I mean, that channel is really nice, but I'd want the channel fill to be lower. If we can, I guess. Originally, I was talking about there not being much. Let's say that we get long. Let's say that we fill here. See, now that this kind of counteracts my higher time frame talk, where if we do fill here, while this isn't a good long entry for me, pushing back up, filling right here would make a good short entry, looking to fill some of these levels right here. So good intraday plans as well as some of the longer term outlook. That's probably where I'm going to leave this one. Before I move on, do we have any questions? I think next we've got gold, not gold, crude. So is there any questions on the S&P before we move forward? Giving a mental 20-second countdown. Choose the upside fib anchor from 2740. Is that 2740? I don't think I have a fib from 20. I don't have a fib anchor from 2740. $2,700. Oh, okay, this one. So if you look at, if you go back to what we were talking about with breaking and retesting and jumping off from significant levels, you look at the overall trend of the market. This stands out fairly well. And this right here, looking backward, was jumping off point 4, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, almost 3 weeks. Well, no, almost 4 weeks, 3.5. We'll say almost 3.5 weeks of bullish momentum. And then from there forward, it was pivot point, pivot point, pivot point 3 times, pivot point, pivot point, pivot point, pivot point, pivot point. And then most recently, looking here, it was quick target fill, quick target sell off, quick target fill, quick target sell off, right? If we expand this a little bit, you can see the volume at which that really takes shape. And then once we do break above it, we finally, you can see we get a quick retest of that level, and then that's what breaks the camel's back, and we push straight forward upward. So while it's not super exact, that level, this is technically the last retest of this overall area, which is the overall trend of the market and the overall pivot point right in the middle of price action. So for me, this was a fairly true test before, because you can see we get the separation, we get the retest, and then from there, that's when we start to move forward with this fib sequence. And just looking at it, you get the sense that fib sequence held, fib sequence held. So this works as an anchor for that push upward, because the fibs coming out of this level are pretty clean. So that's why I chose that as an anchor. Anything else before we slide forward? No? All right. Let's move on to crude. What has crude done lately? I haven't looked at crude in quite some time. What does that trend look like? Oh, that trend's nice. All right, let's see. Yeah, it's not right. Don't like that. That's decent. Impulse, what does that rundown look like? That held pretty beautifully. Then what does the swing look like? Okay. So the swing gives us more of a couple zones that build out rather than precise tests. Although, what is the 38-2? Yeah, same thing. Gives us zones. Don't need those. This is long enough. Let's see. What does this validation look like? 50, held well. Man, this doesn't want to snap to the right spot. It's not clean, but that is. And that's okay. And this gives us some of that precise entry that we are looking for. This decent little change control zone. If we pull this over, what does it do? Go up a little. Okay, so we've got a, what is this, a weekly change control zone with nice point right at the top, which we're currently testing. Oh, gap level there. Decent fill high. Now let's look at the daily. I bet that's going to be a nice retracement. Yeah, pretty clean right here. And if we can get, well, actually this is a good stop too. It's probably right around the 38.2. Okay, so we've got some interesting decisions coming up. I don't like either of those. Yeah. All right, so let's say that we get far enough for one of these. Let's say we get to the 61.8, which would be ideal because there's a lot to like if we can get around this area. If we can get down to the 61.8, then our ABCD sits right here. If we don't get down there, our ABCD sits right here. So either way, we're sitting nicely in some good short opportunity areas. Did we test 23.6 at the bottom of change control? Yes, we did. So this could still be in play even without retracing further. I don't want that. I want somewhere in this zone right here because that gives us added confluence here and here if we can fill lower. It's still a good bit away, but for me, 4 hour, it's pushing out of that change control zone pretty strongly. The 4 hour, for me, really, yeah, I missed the impulse, that's why. So the only real retracement that I like, which one's that? It's not that one. The only one that I really like out of this is this deep retracement here. Do we get? Yeah. So how far deep did we go? Didn't quite make the 78.6, but whatever. So really what I like, and I'm going to get rid of the 23.6 too, because that's not the cleanest. There's nothing else around it. So if I'm going to look for a short entry to kind of fill some of these targets to the downside, then it's going to be right here. That's for the short term, right? That's for intraday, intra-week. I don't know that I'd take that just because we're in the middle of change control. Just broke above this level here. If we can break above and retest and then holds, if we can add like another piece of fib structure there, right? So like if we can break above here and then retest and add something like this, and we have another 61.8, another second profit target up there, then I might consider it. But for me, I want to see something up here. And ideally what I'd see before that is a fill down here, but can't always get what we want. So that's where I'm going to leave. That's where I'm going to leave the crude setup. Yeah, it's not steep enough. This is not going to map it because we've already got a lot there, but this is where I'm going to leave the crude setup. That highlights what I want to happen pretty well. Yeah, this area right here, in between the 50 and the 61.8, right? This little piece of structure right here is kind of the retracement that I want to see in order for additional validation here. And I wouldn't be upset with a fill of the 50 if we didn't make it all the way down and get the ABCD up a little higher, right? Because the ABCD would then fall right here and it just adds that confirmation. So before we move on to the pounds, questions on crude. Do that 20-second mental timer again. Last 5, 4, 3. Okay. On to the pound dollar. Pound dollar. What's immediate to us? I'm gonna build that out as a zone instead, because that high doesn't happen in the prettiest spot. We'll change control zone. This actually looks like it sets up fairly similarly to that crude trend that we had, just not as clean. Couple of options there. Let's look at what has happened. Not clean, cleaner, clean. Then we start to get into the heavy trending stuff. Decent. Okay, so the fib structure is okay here. That was super clean. And so the reason that so I validated this, right? You just watched me walk through and validate the fib structure overall. And this was what was validated as the anchor, right, for moving upward. It's not a large difference. So either one of these I'm going to say would work just because we've already hit the low of what's possible here. So we've already hit the 78.6. So I'm not mad at either one of these, just to stay consistent with how I teach. I'm going to keep that there as the validated low. In this case, either one of these would work because we've already hit the low and we're not looking for retracements, but instead we're looking for profit target completions. So, but just for consistency, I'm going to keep that just for if we do build some structure moving forward. Now, on the other hand, that's already clean. And that is front run a little bit. So this is probably our anchor. That's clean. Yep. There's our anchor. We already filled the 61.8. So let's get rid of that. Our 78.6 now magically lines up with our other structure. Imagine that. Fib validation worked. So we've got a lot to like right around here. Again, that's kind of far away. The power of trendline crosses. See, that would have been ideal if we could just make the bull run up there, but that's a little too far. This is a little too sharp, so I'm going to get rid of that one. Got some important decisions. Whoa, what happens? That double. Yeah, that's exactly what happened. Double post there. So what will be interesting from here forward is to see how this progresses upward. If it progresses upward. I guess I should have added a couple of things to the downside for if we do break south. I don't necessarily, you know, there's not much that I like to the downside at this point. It's going to be hitting profit targets. For me, what I want to see is following some form of this path back upward and to fill some of these profit targets to the upside and to start to push. Why do you hate me this morning? There we go. And to start to push up in a way that keeps structure intact. So the 4 hour, right? This is going to be super short term. These two areas right here. The 4 hour impulses held pretty nice. If we get it to snap to the right spot, there we go. So the 4 hour impulses to the downside look okay. If we can push down a little more, we didn't fill the 78.6, so I'm going to leave that on there. It's not the cleanest looking piece of structure, but if we can get the bearish move out of there, and we did fill the 78.6, but that's not what I'm interested in. If we can get the bearish move out of these levels, yeah, it's not clean, and fill right around here, then in the short term, this would be kind of my deciding point for how are we going to progress moving forward, right? Because there's a lot to like for structure to the upside. And that's really what I want to see. So this is going to be in terms of filling some of this structure and starting an uptrend, at least starting an uptrend to get back to kind of this area. Then this is going to be, and I'm even going to shrink this. This is going to be kind of the deciding cross section. Maybe we push out of it, right? We did already fill the 61.8. I'm gonna put that back on just because we did already fill it. So we did already fill the 61.8, and if we can push upward, it wouldn't be a big shock, and I wouldn't be upset with that, not at all. This overall run, the retracements look pretty decent. Add that back on afterwards if you want. I'm gonna take it off because it's too much, but what I would ideally like to see is a push down here and then force the market to make a decision right here. Because that would be, there's just too much there not to like. And this didn't snap to the right spot either. Probably gives us a little bigger zone. It does. Or spreads it out a little bit. But either way, right here would be ideal. And then we can start to make the ascent. If we do start to make the ascent now, again, no real issue with that. I just would like to see a little bit more bears before we do that. But, I mean, if this is the case and we hold the low, I'm actually going to get, you can add on the others. I'm going to leave the 78.6 only just because that, if we do push upward, then this is another good decision point. So that's probably where I'll also leave the pound dollar. Pretty good structure. Excuse me, on the short term. On the short term there. So we've got a good mix of long-term targets and shorter-term opportunity on all of the charts we looked at today. So that's where I'm going to leave it for the pound dollar. I've got until 9 scheduled. We don't need to take until 9 if there are no questions, but what questions, if any, are there on either any of the charts we looked at or just in general? Anything? I could start calling on people. All right. I will give it, I'll stay on until 8. Oh, okay. What's my preferred way to trade change control zones? Have you gone through the Forex Mastery course? So I highlighted it pretty in detail there. For me, change control zones are areas of heavy transactions filling the next target fairly quickly, right? Change control zones, while you're in change control zones, give heavy transactional volume for level to level trading. When you break out of those zones, then you're primarily looking for fib structure to hold so that you can start to facilitate trend and start to identify trend. So it varies whether or not you're in the change control zone or you're outside of it. Inside, I'm looking for quick level to level fills if I'm going to take something. Outside of it, I'm looking for clean retests and then building fib structure coming out of it. So I don't really have a favorite way to trade anything. I just trade what the chart gives me. But that's primarily what I'm looking for in terms of change control. Because if you think about if you think about change control as a term, while you're within change control, no one has it, right? It's trying to change hands. No one has control. So I don't want to hold for too long and make a biased trade. When you're outside of it, theoretically, you've broken to one side and control has changed hands. So you're looking to build validation moving out of that zone. That's how I would answer that question. What else is out there? Now, I've got the time scheduled, so don't be afraid to ask a question that has a longer answer. I'll give it like 2 minutes after the answer to every question. So I answered that one. It's 8:46 now. Probably eaten up a good portion of the 8:46 minutes, so I'll wait until 8:49. There we go, 8:47. So I will wait until 8:49. If there are no new questions by 8:49, then we'll call it. If there are, then I'll go 2 minutes longer from the end of answering that question. Okay. When it comes to the Aussie pairs, how do you trade them with little to no resistance levels to help you if they go lower? I'm not entering any new trades on the Aussie. The only thing I have right now is I have a short on the Aussie yen, but I've been in that since 85.91. So right now it's about 400 pips. So I am not, like you said, like I stated when we first started today, there's nothing that gives me, it's just been a dump. So there's no good indicators for me to get back in on a short opportunity. There are better opportunities out there at this point, which is why we looked at the pound instead of any Aussie pairs. I don't want to force anything, and so I likely will stay away from Aussie pairs today until we can start to build some structure back up. Because right now, with that flash crash that happened a while back, there's primarily nothing for us to base trades off of. You don't want to, because that's a recipe for disaster. when you're trying to make trades happen. Okay, so 8:48. So next, okay, never mind. Next one. When I draw a trend from the higher time frame, then I go to lower time frame. It's sometimes off a bit. Yeah, that's just the way that Thinkorswim works. It doesn't snap properly for when you go from higher to lower time frame. I adjust it because you don't want something that's veering away. So I would recommend you adjust it when you drop back down. $8.49. So 8.51 will be the next cutoff unless there's a new question. All right, 1 minute, unless there's a new question. So going back to the ES example, you said what are the best times to use high to high? I'm not. Where's the question in there? Are you asking when is it best to use high to high? Is this the question? Okay. It's kind of the same. So it's best to use high to high when you break significant levels, and when that level is the last sell off or the last buyout before you break significant levels. It's not something you want to overuse, but for instance, if we were to, let me save this drawing set so I can change this up a little bit. Oh, I don't think I did that right. Hope I didn't just lose it. Nope. Okay. Let's try this one more time. Save as new drawing set. Okay. So now let's do this one. So knowing what we know about how this chart has taken shape, I would consider this a significant level. It's a big significant level. The last sell-off, both times, happens right at this level. So either here or here, right? So one of those two. That's the last sell-off before this level has been broken, because it's now been broken. Looking here, this is another significant level. If we can get the clearance above this, if we can get the clearance above this level and push forward, then to me, let's say that we push up to 3070. It's 3070. Let's say we push up to 3070. To me, if we can push up to 3070, that's proper high to high. Breaking one significant level, enough clearance to get a decent retracement back in. Same, could do the same on the hourly, on the 4-hour, on the weekly, but you want a significant move out of a strong level, and then as we break above it, And I would recommend, like, I'm not going to get too deep into it because there's some people who haven't taken the structure course and they don't understand what high to high is. But I would recommend revisiting kind of the concept of breaking significant levels and how to best utilize those. Because for me, like, you just want to make sure that the whole purpose is that you're capitalizing on heavy transactional volume, and that you're making sure that that level is going to act in the future as a strong piece of structure. I don't see a good example here, otherwise I would point one out, but that is just kind of revisiting the concept of high to high, low to low. That's what I would recommend, is looking for strong pieces of structure, similar to what we just did, and looking for significant moves on either side coming out of those levels. When it comes to trends, sometimes it has long-term trend and forms an immediate one down below. It is hard which one to go with. I mean, we kind of did that on not all of the charts that we just did, but if you look at like what was it, crude? Which one was the one that on the 4 hour? Oh no, it was here, right? So we've got the longer term trend and the shorter term trend. It's just a matter of what style of trader you are, right? If you're an intraday trader, then look, and you're quick, decisive moves, and you want to capitalize quickly, look for the intraday stuff. If you're a swing trader, look for the longer term stuff. When they both work together, then that's ideal, right? Like if we were to have an uptrend kind of cross right here from the daily or something, then just it would add more confluence. But really, this is where it comes to tailoring your style to what's on the chart, right? So for me, I leverage both. I leverage both the intraday short-term channel stuff, right? Like I was short from here. I was long. I posted on Friday. I was long coming out of those levels, but they were super quick. Was it Friday or Thursday? I can't remember. But yeah, it's a matter of taking advantage of what makes sense for your style. So if you're a swing trader or the longer term levels map out well with the shorter term stuff, then by all means take advantage of it. But if you're a intraday trader and you're forming this little channel while you're moving towards higher time frame levels, then find a way to take advantage of and exploit that. There's always going to be oscillations, right? You think of, like, this is the overall trend right here, and we're oscillating the entire way up. And now we're in the middle of one of those longer term oscillations, but we're oscillating within that oscillation. So there's always going to be price movement. There's always going to be those oscillations. Any other questions on the technicals? Or anything? If you have anything else, then feel free to message me. I've got another meeting right at 9, and I've been in this conference room for 3 hours now, so I have to run, take a bio break before this starts, before my next meeting starts. So if you have any other questions, by all means, message me, or just post them in chat. Yeah, I am I am over my cold. My wife got it, which is not ideal because it's probably going to get passed back to me. So I've been trying to spend as much time out of the house as I possibly can. But yeah, I can talk without coughing now, which is great, which is why I'm able to now hold live plannings. But we'll have, like I said, we'll have the recap on Friday. So we'll have the weekly recap on Friday, like kind of what happens throughout the week. And we'll go over some of the trades that I took, others took, how the charts panned out. And until then, we'll see you guys in the chat room. Have a good Monday.